Hi guys, today we came to Abu Dhabi, and the reason we're here is attending Bitcoin MENA 2025 conference. So for me, I would say I kind of a small crypto enthusiast. I like all this Bitcoin and cryptocurrency. So, and it's one of the biggest events in the region, Middle East and Northern Africa. And it's for 2 days. It's December 8th, December 9th. So I'm coming for the second day. And there will be many speakers, many crypto investors, and people who are involved in this industry. And for me, one of the main points today at 4 p.m. will be speaking Michael Saylor. As you know, it's one of the biggest guy in crypto and Bitcoin evangelist, I would say. And also the second guy I'm interested to watch his speech is the founder of Binance crypto exchange. So let's go inside and let's explore it together. Okay guys, the event is held at Abu Dhabi National Exhibition Center. That's the main entrance and registrations. The tickets was available online. You can buy it in advance. It was starting from around $100. So let's go inside and let's get our badges. Okay, once you enter, you can print your pass. And then there is also a security check. Alright, let's go inside. Right now.
A lot of identifying information.
Additional point, which is that you're not only Bitcoiners, particularly miners, radically profit-driven, you live and die by your operation as a business, but there's also this aspect of being good stewards of the blockchain, being good stewards of Bitcoin. And we know that the natural consequence of centralization is technically overcomputation. You can start
VIP lounge, enterprise stage.
Not like a millennium, like 1,000-year-old monster. And so I think the very important thing here is to the extent that this holds true, right? That Bitcoin is space continuously probably going to be it as adoption continues, and dollar, you know what you have, right? It's like always one. And somewhere in the middle is probably gold. So I think it's amazing. I think it's a sign that the adoption continues, and I think Bitcoin is a great collateral, and I think it probably will become an even better collateral in the future. And in the meanwhile, having a lot of margin loans, especially as a Bitcoin miner, actually, back in that, I moved some of those over to be now backed by gold, by XAUT, actually, not a joke. Because, of course, like when Bitcoin comes down, right, then you get all these margin calls, so that's pretty sad, especially if you need to sell, because you know you really don't want to sell, right?
Alrighty, gents. Well, thank you very much. That's all we have time for, but please join me in thanking our panel.
With Merrill Lynch, and at the time, probably the hottest market was high yield or junk bonds. And my first actually project that I worked on was I helped finance Taj Mahal for President Trump. That was our first deal where we took clients with helicopters from the World Financial Center and took them over with their prospectuses in hand down to Atlantic City, and we sold the first $1 billion high yield deal in the air, basically. And so that was my first taste right out of college. Just a few months from being playing football and being in a fraternity and my view to Wall Street, and that's what they did back then. They threw you in, and
it's a nice sales pitch. You get put on a helicopter to close the deal.
Yes, and ironically, there were a lot of Japanese investors at that time in the high yield market, and so that you could do this, and I think 30 million.
Nice.
It was I think 40 million. We sold most of the deal, and then I went on to be the CEO of a Japanese bank afterwards. So my trajectory on Wall Street, which is more traditional or old school, as some of the Bitcoin people would say, is I went on and I was very fortunate to be able to see or predict where the ball would be, and we're in more of what I call like the hot markets. Mortgages became very, very, very trendy back then. I got involved in those a lot. And then, derivatives, as we know them. And then I went from Merrill Lynch, where I started, to from called ABN AMRO, a Dutch bank, where I worked my way up to running all of fixed income in Americas. We got bought out by Royal Bank of Scotland in the largest bank merger in the world. And I had to stay for a year. And then I went on to a firm called Mizuho, which was at one point.
You've built a behemoth. Talk to us about Calamos. Like, what does the business look like? How do you make those money?
So we have one of our flagship funds, so we call a market neutral fund, and it's convertible arbitrage, hedged equities, and it's got some a merger arb as well, and it basically delivers approximately SOFR plus 350. So if market's up, market's down. It's a very nice risk managed product that is used as a fixed income alternative. Instead of in money markets earning 3, 4, 5%, if that, this would give you a nice little boost, especially when rates were at 0, and this was earning a few hundred points over that. It's a great product for that, and it's a 35-year-old fund. I think 1 year out of the 35 was down like 1%, 2%. It's a phenomenal rocket. That's one of the things. A lot of convertible. We have emerging market funds. We have an ESG fund. We have small cap funds, long short. We just started a partnership with a firm called Axia, which is a consultant. So now we're in the private credit world using interval fund wrapper. So we did a private credit, private equity, and a hedge fund that we launched on the last, call it 16, 18 months.
Wow.
So we're continuing I know I don't want to say the word that everybody's a democratized product because with our private equity, you invest the minute you put your money in. You don't have to wait 2-3 years for drawdowns. There's no K1s, and there's quarterly liquidity of 5%, up to 5% for the entire fund. So mom and pop, for those $2,500, can invest side by side with the likes of Carlyle and Blackstone and Apollo and all the funds that we draw upon and co-invest with. So it's truly revolutionary that we're actually bringing this type of stuff to the product. And then there's Bitcoin.
Yeah, so give us a little bit of the background on how you got into Bitcoin. I mean, I feel like the story you just shared, the career trajectory you've been on, the business you've built, you kind of touched all the different parts of TradFi that are out there. How'd you get into Bitcoin?
It was always interesting, and we always looked at it, and I had a group that was following it. I had it for a long time, but June 28th, 2015, I was with my family in Greece, and it was during the time of the crisis, and the Greek government put capital controls in place. So this is not a third world country. This is an advanced country in the Western world where at the time, no matter how much money you had in the banks, you could only take a maximum of 60 euros out a day. You could have millions of dollars, and that's when I just triggered. I said, this is terrible. Luckily, I didn't have a lot of money invested in Greece, even though I'm of Greek heritage. But for a government to tell you that you can't touch your money, or a bank to say, no, I'm sorry. So, they wanted to prevent the runs on the banks and stuff. And then I realized as Bitcoin came out and the use of Bitcoin, the fact that it's really a true capitalistic product where you have complete control of your money. And I thought that was right then and then, that's fantastic. People don't think it could happen until it happens. That was just 10 years ago, right? It lasted to 2019. So, it was wild. Now, it got less and less, and they were able to take more, but full controls were not off until 2019. So that really, using our management and the way we've got great options traders because of our risk management and our convertible DNA. It wasn't until January of this year that when the current administration of the United States won the elections, that the SEC started loosening up. So there was finally a Bitcoin index that we helped create with the Chicago Board of Options Exchange. And then, the market, we were able to actually launch in January the first 100% protected Bitcoin ETF. And how that works is that the day of launch, we buy treasury discounts out for a year. We buy options on that day on the Bitcoin index. And then we sell out our money calls as well in order to do that. And it protects you with a particular cap rate. So you don't get all the upside. On 100%, you get, at the time we launched the first time, it was 11.85% of the upside. But if it falls, like it's done many times before, you don't lose any money if you keep it for a year. And then we launched a 90%, which protected, so you can lose up to 10%. Of course, the upside, the cap rate is higher. And then 80%, which went up to 50% in terms of your return. 80%, the volatility is more equal, the 90% volatility is more equal to gold, but the upside is much, much, much better than gold or some of the commodities. And the 80% is very, very similar to the volatility of equities. And, getting 45% to 50% of the upside of the annualized return of Bitcoin versus the S&P that averages close to 10% on average. It's a lot more returns, a lot less volatility, And now the institutions are looking to increase their allocations because of that. Because now you could add more than maybe 1 or 2% of your portfolio to maybe 5 or even as high as 10%, because you can replace it with traditional equities or commodities or just cash. Because you don't have to worry about the volatility that going long just straight Bitcoin does.
Where do you think we are in terms of institutions coming in? Like, if you put a percentage on, you know, how much penetration we have into the institutional capital market, what would you place it at?
Let's just start for the whole world. I think the numbers are 4% of the 2030. I can see anything.
$1 million of Bitcoin, people. There you have it, on the record.
All right, John, thank you very much.
Thank you.
So excited to welcome on the stage Brandon Green, CEO at BTC Inc. He'll be joined today by one and only CZ, founder of Finance and Giggle Academy. Give him a warm welcome. The floor is yours.
Wow, CZ. Everyone give it up for CZ. Isn't he amazing? Well, we were chatting backstage about, you know, how we wanted to kick things off, and
I think the first trick I planned was to he's launching a tokenized gold. So I was going to ask him about it. I'm host, right? So I was going to say, look, I'm going to generously offer you time to talk about your new project. And then the more he talks about the tokenized gold, the more he has to talk about the benefits of blockchain. And then I would just repeat to him, so you like blockchain better than the gold? That part didn't come out quite strong enough. I tried that, didn't quite come out. And then I also prepared the gold. I figured he would do he likes to talk, right? He's a nice guy. I figured as a host, I would let him do most of the talking. I thought the gold bar might work, and the internet only carved that part out, which is great. So it's like a 2-minute thing. And you went viral, so it's pretty good. Yeah, it's fun. Yeah.
that was fun. That was fun. Well, so CZ, you've been on quite the journey over the past 18 months, 24 months.
Yeah.
Walk us through really from the beginning. What was it like being the #1 highest profile target of Operation Choke Point 2.0?
Well, I think there's really no choice. And we have been operating the largest crypto exchange for 7-8 years now. And then as the largest platform, you're the first one every regulator look at when they look at crypto. And as the largest centralized platform. So we're always there. We got all the regulatory warnings 5 years ago. And then we're the most scrutinized. So we always have to be the first to deal with regulators and even prosecutors. And then there's no precedent, right? So this nobody else has solved this problem. So we're always out there. So this is quite a bit of an unknown. But you know, my view on life is, life is a simulation. There's a lot of challenges that are programmed in front of you. You just have to go through them. There's no way to avoid them.
You're one of the few Bitcoiners who have really stuck their neck out in that way for the industry, and you've had to go to jail for it. What was that experience like? I mean, how did you feel?
Well, actually, it was mostly the uncertainty that was really scary. I don't know if they were going to slap on another charge to keep me there forever. But for me, the decision was pretty simple. I thought, look, if I don't go, they threatened, or they at least said they would potentially charge a lot of people. It would not be good for Binance. It would not be good for our co-founders. It would not be good for our employees. It would not be good for the BNB holders. It would not be good for anybody in the crypto industry. So I thought, look, it's a banking secrecy violation. It's a failure to register. It's a serious charge, but no one went to jail for it. I thought I would just go and deal with it, and I'll step down CEO. That was also a difficult part, but I've been CEO for 7 years at that point, so I'm happy to actually step down. And if I quit myself, people will say, look, this guy ran out of stamina, right? So having them force me to step down is like I can retire and let other people carry on. So I didn't care. I didn't think too much about myself, but I thought it was important. It was the right decision to do for everyone, basically, and myself included. So I just thought, I go and deal with it. And I didn't know that, a year later, U.S. is going to be this pro crypto. So That part I did not expect. But you know, things change.
Yeah, absolutely. And tell me then, I guess tell everyone, what was it like the moment you received the pardon from President Trump? What was your first reaction? What was the first thing you did?
Well, first of all, that was an emotional thing to have happen. I think first of all, it's the feeling of relief and justice. It's like, okay, finally, it actually completely changed my perception of the United States as well. Because it just feels the U.S. claims to be the freedom, democracy, etc., and justice and fairness. I think when that happened, I just felt a sense of relief that U.S. is now a fair, just country again, at least from my perspective. I just felt, look, and then I want to help make the U.S. capital of crypto again. So there's more work to do.
Yeah. Well, and the U.S. it's one of many governments, right? And I think what we've seen kind of on your path post this whole situation is you've been talking to a lot of governments, right, about Bitcoin. How have those conversations gone? And maybe even tell us, you grew up on a farm in China. You're a rugged entrepreneur. Now you're talking to governments around the world about Bitcoin. What does it feel like to even just be in those conversations?
Sure, I'll talk about the part first, which is even maybe 3-4 years ago when I talked with governments, the question was what and why, right? What is crypto and why should we adopt it? But now when I talk to governments, the question is how, right? So they're no longer asking the first two questions. At least the people I'm talking to. If a government is still asking what and why, I usually don't spend time talking to them. I just let them figure it out, and they do. So now it's all about how do we regulate crypto? What are the good regulations? What are the bad ones? How do we regulate exchanges? How do we protect consumers? How do we regulate stable coins? How do we set up a national crypto reserve? How do we how do we do tokenization? Issue national bonds, tokenize oil, other reserves, etc. So the question really now is how. And when it comes to how, I think they're way more smarter people than me. But I somehow have this hat that I'm the crypto guy, and everyone wants to talk to me. So, but for me, it's a very meaningful thing to do. Actually, I'm freed up from managing day-to-day operations of Binance.com, etc. So that part of work is somebody else taking care of it. And I now just go to government to advise them on how to regulate crypto, which I think actually probably has more impact to people, more positive impact to people around the world than if I was still working at Binance.com. So, and then to your first question, I believe in simulation theory. So if we're not in a simulation, there's no way I can grow up from a kid in a village with no running water, no electricity, till now. They say I'm a rich guy and then build a successful business, talking with governments, advising them on policies about this industry. So, but for me, I just try to do my part. Whichever situation is in front of me, I just gotta do my best.
Would Kids CZ on that farm believe that you're in the position you're in now if you had told him all the way back then?
No, absolutely not. There's just absolutely no way you can imagine this stuff.
Interesting. Well, so you've been talking to governments. You've also been kind of one of the most prolific entrepreneurs in the whole industry, right? You took a step back from Binance, like you said. You've been doing a lot of advocacy to governments. Do you have a next chapter? Do you have something that you're really planning to make your project next?
Well, Gig Academy is kind of my pet project right now. It's a free education platform for people who don't know it. But for me, when I was deciding to do Gig Academy, I thought about what I would do next. There's a few questions I asked myself. I don't really care too much about fame or legacy. I just pleaded guilty to a federal crime, and I was going to deal with all of these issues. So, but for me, reputation and integrity is different. Is important. There's no fraud, no users got hurt. I've never hurt anybody, so that's my reputation. Fame and legacy, they're not so important to me. I didn't care too much about money. People say I have a lot of money, but I don't spend a lot. So I still buy polo shirts. I don't know, this is Amazon basic pants, etc. So I don't spend a lot of money, and then power doesn't matter to me either. I just step down as finance CEO. So what do I want to do? What do I want? So I thought really hard about it. I just want that when I'm really old and when I look back at my life, I want to be able to tell myself I did my best. That means that if I have high abilities, I need to do more. If I have little abilities, I'll just contribute a little bit less. But I think doesn't matter the magnitude, we just gotta do our best and leave a little bit of a positive contribution to this world that we came into. That's all I want to do. And then I thought really hard about it. I think education, a free education platform that's completely digitized, gamified, and individualized, and pushing to people who don't have education is probably the biggest positive impact I can do. So that's why I started that project. I'm very happy every time I work on that project. Right now, People Academy reaches about 90,000 kids. We only been working for about a year. And there's still quite a lot of improvements we need to add to the product in terms of features, etc., but also content. So I'll continue to work on that. But I'm also helping with Easy Labs investments. We do investments in blockchain, AI, biotech. I'm helping with mentoring many projects in our space, DNB chain projects, other AI projects, etc. So I'm more of like a coaching type of role. So that's kind of what I do, and I enjoy it.
That's amazing. That's amazing. Truly, I mean, if more people could dedicate their lives to education and helping the world, that's an amazing thing. So let's talk about Bitcoin for a second.
Sure.
There's been a lot of things happening in the market as it pertains to Bitcoin ETFs getting launched, Bitcoin treasury companies coming out, institutions getting involved, Bitcoin strategic reserves getting launched. What do you think about what this adoption cycle has looked like? Are you surprised by it, or are you excited by it?
I'm not super surprised, but this cycle is a little bit different than previous cycles. This cycle, as you said, all of those things are institutional adoption, right? So they're all like Wall Street, etc. So we have this cycle. We've seen more institutions come in than I would say probably than previous cycles are all mostly retail. This cycle, the retail rushing in, we have not seen that yet. But this is still very good for crypto, right? So now we're kind of bridging the gap between crypto just being a grassroots movement to now Wall Street really participating. And Wall Street is the largest institution market in the world. US is. US is the largest institution market. But now we're seeing that spill over to other countries as well. So many funds in this country buy the IBIT ETFs, etc. So now they all have Bitcoin exposure. Michael Saylor, who I just talked to, is speaking behind this session, and he's selling everyone Bitcoin basically, right?
Yeah.
And he's doing a fantastic job at it. So we're seeing a lot more adoption. I think that's fantastic.
Well, let me put you on the spot. We're in December.
Yeah.
This is supposed to be in the 4-year cycle theory. This is supposed to be 4, right? This is supposed to be the year of the massive bull market. We've been relatively flat. Is the 4-year cycle dead, or is it changing? What do you think?
So, in a sense, actually, it would be better if the 4-year cycle is dead. It's better if we don't follow the 4-year cycles today. Because in the 4-year cycles, usually this December will be the peak. But if we follow the 4-year cycles, then the winter will probably, the crypto winter will be the next year or 2 years, etc. But right now, I think there's another force at play, which is President Trump. Which
so
actually,
cute.
on my shoes, there's President Trump. You see on the side.
Yeah, great shoes.
So I think President Trump is using stock market as his benchmark. So there's rate cuts coming, there's quantitative easing, which will basically pump the stock market. Right?
We've been in macro headwinds since 2022, right?
Yeah.
This is the first time that we're starting to see macro turn dovish.
Yeah. So I think when the stock market's doing well, people have cash. People diversify their holdings and they participate in crypto as well. We've seen that, and crypto is much smaller than the stock market today. So crypto is kind of tethered. So I think, I'm not sure, don't quote me on this, but I think that force will be quite strong. So that force may be strong enough to offset the 4-year cycle. Who knows?
So you're saying next year bull market?
We may be seeing a super cycle. So
Wow.
we'll see. I'm not sure.
We'll see.
Yeah.
So I want to ask you as well, what surprised you most about Bitcoin's adoption path over the past decade? I mean, you've been in here over a decade, right?
Yeah.
You've seen it be adopted in a lot of different ways. You've seen narratives, grow and crash, right? What has surprised you most about the path that Bitcoin has taken?
Yeah, it's very surprising actually. You can never predict the adoption path, to be honest, at all. Bitcoin was first taught, well, the Bitcoin white paper is an electronic cash payment system, right? And everyone was doing payments. To be honest, even today, very few people use Bitcoin for payments, right? So that's not really adopted.
Do you think that trend will change?
I think so. And I think, well, maybe not just Bitcoin, also crypto payments. I think, I think on payment side, first of all, there will be integration between the crypto payments versus a traditional payment rails, like the crypto cards, right? So the Binance card, the user swipe and merchants gets fiat, user pay in crypto. And then this way, both sides can grow. The demand side, the user side can grow quite a bit. And then once the user side is large enough, then the payment side will accept crypto directly. The second is the stable coins, right? People can pay in stable coins instead of Bitcoin. A lot of people have in their minds that spending Bitcoin is bad because then you lose the upside. But you could, whatever money you have left, you can use that to buy Bitcoin that you just spent. But anyway, and then I think in the future is direct crypto payments when everyone has more adoption of crypto. So payments, was expected to happen. ICO I didn't see that at the beginning of 2017, but mid 2017 was all the rage. We did an ICO. By today's standards, I think we have a successful project. I didn't expect NFTs. I didn't expect the DeFi summer. All of these things are kind of surprises. But I think, and I did not expect ETFs.
Really?
Yeah. So you just couldn't see that before it happens. Because from my perspective, I was being prosecuted for pushing crypto, right? I was like, there's no way the ETF will get approved. So again, everybody's perspective is a little bit different. Yeah.
What do you make of that, right? At the same time that you're being prosecuted for creating an exchange to buy Bitcoin, the legacy financial system is approving products to buy Bitcoin. How do you square that?
Well, again, this is my personal opinion. It feels like they want to push down what the grassroots movement is, and they want to institutionalize it. But Bitcoin itself, today, most of the holders are still retail holders, and it is an international movement. So, I think we welcome the institutional participation, but you can't remove Bitcoin from the rest of the grassroots movement.
Yeah, no, absolutely. Well, so we got about a minute left, and I want to make sure you mentioned earlier talking about legacy that you don't think about it too much, but I want to push you on it. Assuming that you're not going to go back to Binance, which doesn't sound like you are, what do you want your legacy in Bitcoin and in this industry to be?
I think I want to be seen. Well, I am the crypto sales guy, so I'm helping with the crypto adoption all around the world. Be part of Binance or outside of Binance, I'm continuing to do that. And I think I'm actually making more impact now because I'm not running a platform anymore. So I'm just a shareholder there. People actually take my advice more openly because I'm supposed to be more neutral now. I seem as more neutral. But I'm a crypto diehard, right? So I always push crypto adoption. And I think that's pretty much it. I want to be remembered as the guy who helped to increase crypto adoption.
Love it. Last question before we finish. Who's the bigger Bitcoin bull, you or Michael Saylor?
I think Bitcoin-wise, it's Michael. I think he's very focused on Bitcoin, whereas I'm more of a multiple. So I think Bitcoin itself is great. It's the global reserve currency in crypto and probably in the world soon. We can see that. But the Bitcoin with Givens is the most decentralized cryptocurrency, etc., and the highest market cap. But Bitcoin's rate of innovation is necessarily slower than some of the other newer projects, smaller teams, etc. So I'm a guy who encourages innovation, and I think all of those innovations will help Bitcoin. They don't take away from Bitcoin. Bitcoin can copy many of the innovations, right? So Bitcoin ordinals can copy the NFTs. Well, NFTs kind of went away. Well, not went away, much smaller now. But Bitcoin can reverse copy many of those innovations. But if you want to innovate on Bitcoin alone, it's hard. You have to fork Bitcoin all the time, which creates a lot of other problems in the industry. So I'm more of a founder-friendly, innovator-friendly person. I want to help more people innovate. And we don't need, we shouldn't just have one blockchain. We should have multiple blockchains. And I think when the technology matures, like 10, 20, 30 years later, we can have a few blockchains. But today, for the amount of innovation we're looking for, the more innovations, the more blockchains we have, the better.
So to maybe put it another way, invest in innovation, measure the success in Bitcoin?
Pretty much. So if you can outrun Bitcoin, that's true success. Otherwise, you should buy Bitcoin.
That's amazing. Well, everyone, give it up for CZ.
Thank you, guys. Thank you.
Thank you so much.
Thank you so much.
Give him a very warm welcome, Michael Saylor, founder and executive chairman and strategy. Give him a big hand and be louder. Welcome, Michael. The floor is yours.
This week I started in Dubai and went to Bahrain and went to Kuwait, and of course I'm ending in Abu Dhabi. The big end. This is the big end of the tour, and I have had a chance to meet with 100 investors, regulators, banks, the traders, and those running the government, and very exciting. So without further ado, let's put my presentation up on stage. I'll start with the title, right? My topic today is digital capital, credit, money, and banking. And so let's start with the first topic, digital capital. What is digital capital? Bitcoin is digital capital. Gold is metallic capital. Real estate is property capital. S&P is equity capital. Why is Bitcoin digital capital? First of all, because Donald J. Trump is the Bitcoin president. Donald J. Trump says he is intent on making America the Bitcoin superpower, the crypto capital of the world, the leader in digital assets. And David Sachs, who works for him, in March of 2025, this year, said Bitcoin is special. Bitcoin is an asset without an issuer. It is the dominant digital commodity in the world. This administration designated Bitcoin as digital gold. And of course, it's not just the president, it's the vice president who I've met who said that. It's the Secretary of Treasury who I've met who has said that. It is the head of the SEC who I've met who has said that. It is the head of National Intelligence, Tulsi Gabbard, who I've met who said that. It's the head of Commerce, the Small Business Administration, Kelly Loeffler, who I've met who said that. It's Bill Pulte, who runs the Federal Housing Administration and regulates $5 trillion or $6 trillion of home mortgages, who I've met who said that. It's RFK, who not that long ago wanted the U.S. government to buy 4 million Bitcoin, who I've met who believes it. It's the incoming head of the CFTC, Mike Selig. It's David Sachs himself, the crypto czar and the Bitcoin czar. It's Howard Lutnick, the Commerce Secretary. And it's Kash Patel, the head of the FBI. So you have a profound consensus amongst everyone running the United States. And the most important thing is that the United States is the most influential financial regulator in the world. And whatever the U.S. banking system does and the U.S. security market does ripples through South America, it ripples through Africa, it ripples through Europe, it ripples through the Middle East, it goes to Canada, it goes to Australia, it even goes to Hong Kong. Even the Chinese will copy what the U.S. is doing. So it's very, very profound inflection. The other major inflection point is all of the large banks in the United States have gone from not banking Bitcoin 12 months ago to, in the past 6 months, I have noted and been approached by BNY Mellon, by Wells Fargo, by Bank of America, by Charles Schwab, by JP Morgan, by Citi. Take us. Well, my company's strategy is the world's first digital treasury company. And because it's digital capital, we have capitalized on it, and we have now accumulated 660,624 Bitcoin, including 10,600 yesterday, we announced. We are acquiring at the range of 500 million to $1 billion a week worth of Bitcoin. We've now at this point acquired not quite $50 billion of Bitcoin, which is worth substantially more. We're not stopping. For those people that we have buyer fatigue, we don't have buyer fatigue. I think that we can buy more Bitcoin than the sellers can sell, and we're going to take it all. And we're going to take it out of circulation. In essence, we're winding up the network, we're powering it up like an engine, it's coiling like a torsion spring of sorts. And what do you do with all that capital? What we've decided to do with that capital is to start creating credit, Bitcoin-backed credit, and we've created the world's first digital credit vehicle. In essence, we are going to digitally transform the credit markets by creating a vehicle powered by digital capital. So the company today is paying out about $800 million worth on our digital credit. We have about 76 years worth of dividends if Bitcoin goes up 0% a year. So I think the Bitcoin reactor has about 76 years of energy. If Bitcoin goes up 1.4% a year, we have infinite energy. We can go forever. So that's really our break-even point. And why do we exist? What is the purpose of our company? We exist to transform capital into credit. So what is capital? Capital is, you have a 5-year-old kid and you give them $1 million block of real estate in the middle of New York City. It's just dirt, it's land, there are no rents. And you say, child, hold that real estate for 30 years and you'll be rich. No cash flows, but you have to wait a long time and it's hard to value the real estate. In our particular case, maybe in 20 years you can finance the real estate. And if you ever want cash flows from it, you have to form a company, get a construction loan, build a building, market the building. You're going to have to rent the building, then you'll get cash flow. That's a lot of work for a 5-year-old kid. Maybe you don't want to do it. So there's another thing you could do for the child. You could give them a piece of paper, a credit instrument that pays them $10,000 a month forever. Right? The picture on the right is credit. I'm just going to give you money every month forever, starting now. Instant gratification. And the picture on the left is capital. I'm not going to give you any money for the next 30 years, but if you've got the patience and you can stand the risk and hold your breath, you'll have even more money. So Bitcoin is digital capital. It's volatile. It's going up. How do you create digital credit? The world is built on capital. All of the blocks of granite underlying Manhattan are the capital. The world is built on capital. The world will be built on Bitcoin, but the world runs on credit. You need money now to eat, to pay the bills, to pay the rent, to pay for your tuition, to get on an airplane, to live your life. And of course, the criticism of a lot of uninformed skeptics is, well, Bitcoin's not an investable asset class because it doesn't have cash flows and we don't know how to value it. And they don't believe something's valuable unless it has cash flows. So a treasury company that's capitalized on Bitcoin can create that cash flows. And so we're creating the credit in order to make this an investable asset class. And what our company does is we convert the digital capital to digital credit. We create the currency. So if you have BTC, we convert it to USD, or we convert it from BTC to Euro. We could, in theory, convert it from BTC to JPY or Great British Pounds. We convert the currency. We strip the risk by over-collateralizing the credit instrument 5 to 1 or 10 to 1. Bitcoin could fall 90%, but we're still over-collateralized, and so you still got your principal. That's the credit proposition. If Bitcoin falls 90% and you have the capital, you've lost 90% of your money. That's the capital proposition. Strip the risk, strip the volatility. Convert a 45 vol asset to 20 vol, or 10 vol, or 5 vol. And then extract the yield. Pay you 10% dividend yield forever. Now, Bitcoin's going up 45% for the past 5 years. So in essence, if you have, and I believe, and I've said this to many a time, I think Bitcoin's going to go up about 30% a year for the next 20 years. So if you have a long time horizon, you shouldn't take the 10%. You should take the 30%. But you have to have the stomach for the volatility. And most people don't want 30% with 30 vol. They want 10% with 10 vol or less vol. So we distill the yield, and then the last thing we do is we compress the duration. Your 5-year-old has to wait 30 years to get rich. That's difficult. Your 5-year-old gets money now forever. That's instant gratification. We're converting 120 months or 240 months of duration. A 30-year bond has 240 months of duration if you're an interest investor. We're stripping it down to 1 month. Pay me now. And so the way you do that is with a huge pool of equity capital. We have 60 to 70 billion dollars of equity capital a day, and then you embed the credit instrument into the equity capital. And that's what allows us to build this digital credit. And I'm going to talk about digital credit and digital equity, but with inside. When gold was money, and gold was the commodity store of value in the world, the killer app for gold, it wasn't the gold. Cash settlement meant I moved gold from here to there. The killer app of gold was credit. The Rothschilds created gold-backed credit. The banks created credit. All currency was credit. All sovereign debt was credit. All corporate debt was gold-backed credit. All consumer debt was gold-backed credit. All mortgages were gold-backed. Were preferred stock as credit, a public instrument, a happy name, strike. Sorry, Jack Mahlers. I like the name, so I took it. But you can still have it. STRK. And then we also backed it with digital capital, Bitcoin. And because it's perpetual, we could sell the instrument in the market any given day. So it's like taking the best ideas from an ETF and adding them to the best idea of a bond, the best idea of a common equity, and then putting digital behind it. And then after we did that, we thought, why don't we create a perpetual bond that pays 10% dividend yield forever? And we did that with Strife, STRF. You would never pay 10% in a bond to build a house or to build a data center because it's not going to last 100 years. How do you actually pay someone for 100 years? You have to have a use of proceeds that will last 100 years. So we borrow the money forever, and then we invest the money in Bitcoin forever. We're basically funding we're investing in the digital asset economy forever with money we borrowed forever. We're matching the duration. Because that's a senior instrument, it traded way above par, and the effective yield is 9%. And the idea is that's 9%, an investment grade bond is 4%. We had to pay a higher rate because we never intended to pay the money back, right? We're not giving you the money back in 5 years, we're giving you the money back in 5 million years. An investor would say, pay me more. And first we thought that was a bug. oh, we have to pay more. And then we realized that's a feature, because I would rather pay 10% forever than 5% for 5 years. If you do the math in your head, if you got to repay the principal in 5 years, that's 20% a year plus 5, that's 25% financing versus 10. So if we'd rather pay 10%, who would rather collect 10%? The credit investor. So we created the best credit. The credit became the product that's traded up. And after we did it, we thought, how can we pay people more? Because Bitcoin is going up more than 9% a year. Bitcoin's going up 29% a year. So how do you actually create a perpetual swap and pay somebody more than that forever without credit? And the way you do it is you do it with a non-cumulative junior preferred stock. We created the same version of the stock of Strife, but we stripped away the cumulative right and the governance provision, and it trades below par at 80. And that means that the effective yield is 12.5%. So there's a 3.5% credit spread between the senior instrument and the junior one. And what that means is, if you don't trust anybody in the world, you buy Bitcoin and you collect 30%. If you trust the company and you trust Bitcoin, but you don't want, if you have a short time horizon, you want cash flows, you would buy STRD and you would collect 12%, the first 12% of Bitcoin return forever. And everything above 12.5% goes to the common equity, to MSTR shareholders. And then if you semi-trust the company, if you kind of think Bitcoin's good and the company's good, but I want to make sure that it's very painful for them to ever skip a dividend, you buy STRF. The price to semi-trust us is you get 3.5% less yield. The value to trust us is 3.5%, and the value you get paid if you have a long time horizon. If you're willing to wait 10 years and take nothing for 10 years, you get paid 30%. And so that's three interesting things. We took the idea of Strife and then we did it in Europe. And we actually created a €100 part that pays 10% in euros for European investors, and we call that Stream. Same idea, Strife. And then after we've done all those, I'll call those digital notes. They're like bonds, but they're not bonds, but they're long duration digital credit instruments. Generally if you walk down the street and you ask the average person, do you want to buy a 30-year bond? Not many people want to buy a 30-year convertible bond. But if you said, do you want a bank account that pays you 10%? Everybody wants that. So we started thinking, how do we strip the volatility, the duration, the delta, and the complexity off the instrument? And we created Stretch, STRC. And the idea of STRC is we'll just pay a monthly cash dividend and try to get it to trade about at par, about 100. So if Strife is a 20-year bond, Stretch is a 1-month T-bill, a 1-month Bitcoin bond. Now, this next chart shows you the difference between credit and capital. We took Stretch public, and in August 1st, if you bought $100 of Stretch, it would have traded up to about 99. It would have traded up 9%, and you would collect $3.70 worth of dividends. If you had bought $100 worth of Bitcoin, it would have traded down $23. Which is the better investment? Well, over the 4 months, it's the credit. If you're going to hold it 4 years, it's the capital. Bitcoin is a much better long-term investment, but you wouldn't be able to tell from that chart. And if you needed the money tomorrow, you'd want the credit. And so what you can see we're doing is we're straightening out that volatility and we're stripping that risk and we're creating that cash flow. Now, remember I told you I had to pay more money for the preferred credit. That was the bug, but it became the feature. And then I said, well, we wanted to take it public. So we took it public. It pays a big dividend. It's backed by Bitcoin. And inadvertently, we created the most interesting credit instruments in the world. These are the most successful preferred stocks ever. And here's one way to see it. The average preferred stock trades over the counter That means it's illegal for you as a retail investor to buy it. It's only institutions that can buy it. It's like 37 guys in a back alley trading baseball cards with each other. They trade 100,000 a day. Wide bid-ask spreads is not very good product. If you take them public in Europe or the US, they trade $1 million a day. The first credit instruments we created, like Stripe and Strife and Stride, they trade about $30 million a day. So they were 30x more liquid than anything anybody had done before. But then people said, well, I don't want the volatility, I want monthly, I want it simple, everything else is too complicated. So when we did Stretch, we found the right product market fit. And you can see the instrument started trading 130 million a day, 100x more interesting. That's in the first 4 months. It became 100x more interesting. I think this will become hundreds of millions, then billions of dollars a day. And you can say, well, why doesn't anybody else do this? Because the rest of the capital market approaches credit differently. When Apple borrows money, they borrow money tactically to finance a tax arbitrage. When Microsoft borrows money, they're borrowing it tactically to finance a data center. When a bank borrows money, they're borrowing money to fund a consumer loan business. The money that they're borrowing, they want to get as cheaply as possible. It's a tactic in order to improve a product or a service. For us, the credit is the product. We're not trying to minimize the cost of the credit or the yield we pay. We're actually trying to maximize it and strip the credit risk away so we can invest in Bitcoin forever. And so we're an example of a well-run company where the credit is the product and the rest of the capital market is full of junk bond issuers and investment grade issuers and bank preferred issuers. The credit is the byproduct, right? It's a necessity, but if the CFO of Microsoft had a preferred stock paying 10%, the board of directors would say you should call that, retire it, refinance it, and replace it with 5% money. And so most well-run companies aren't trying to create good credit. They're creating crippled credit. Credit that's good for the issuer, bad for the investor. And we inadvertently flipped that on its head, and we created credit good for the investor. And we didn't actually need the tax deduction because we're a treasury company. And we would rather pay a higher yield because we wanted to invest the money forever in Bitcoin. Nobody else has a use of proceeds to invest in forever that's going to go up faster than the S&P index. And so you have to have the right capital structure and the right corporate structure. And so I talked about the bug being the feature. One way the bug was the feature was we used preferred stocks. The other thing we did is we took them public because over-the-counter markets are very inefficient and the public can't buy them. The third thing we discovered is that if we pay the dividends by issuing equity or by selling securities or even by selling highly appreciated commodities, the dividend we pay is tax-free. It's tax-deferred. That is to say, you get the dividend and then until you've reduced the basis of the instrument to zero, you don't pay taxes on it. Now, if you live in Dubai or Abu Dhabi, it doesn't matter to you. But if you live in New York City or San Francisco or London or Paris, it does matter to you. And so what we did is we created, in essence, tax-deferred dividends, huge amounts of them. And what does that do to the equity, right? Our MSTR is digital equity. Well, if I issue 10% of my Bitcoin capital as credit each year, I'm actually creating a BTC yield of 10%. So that means that every 7 years I double my Bitcoin per share. So if you want to actually hold Bitcoin per share constant, you buy Bitcoin. Or you buy the ETF. But if you wanted to double your Bitcoin per share, what you want to do is issue credit instruments and then buy Bitcoin back. And you can see here that if we just run a routine amplification, then what we do is we 2x or 3x our Bitcoin holdings over the period that you would otherwise have the same. So the way to think of it is MSTR equity is amplified Bitcoin. It's more volatile, it's more performant on the downside, the upside. If you're an equity investor and you want 2x Bitcoin, you would buy an equity that's amplified by credit. If you don't trust anybody, you buy Bitcoin, which is a good idea. If you have a short time horizon and you don't like volatility, you buy the credit. And now let's look at how this breaks down in the world. This is the stretch yield. It pays 10.8% effective yield. Private credit only pays 7. Junk bonds pay 6. Money markets pay 4. Municipal bonds pay less. The bank doesn't want to give you much of anything. This is the best it gets in the entire world, US-based credit. The benchmark is SOFR. SOFR is going to fall. When SOFR falls from 400 basis points to 3, mortgage credit, corporate credit, and junk credit is all going to be drawn south by 100 basis points. So digital credit's already 2 to 4 times better. If you're a retail investor or a corporation and you pay taxes, the fact that you can defer the tax, New York tax, city tax, federal tax, means that buying STRC, buying digital credit, is like a bank paying you 22% interest on your bank deposits. You can see it's off the chart. It's 4 times or 5 times better than buying a conventional money market. In fact, all digital credit is better than all conventional credit. Why? Because the collateral is appreciating and it's digital, and conventional credit is built on depreciating, collapsing collateral, whether it's a data center or a product or a warehouse. And it's all indexed to the risk-free rate, which is repressed by most central bankers. In Japan, it's 50 basis points. All the credit is tied to 50 basis points. And so digital credit is free market rates. And if you're a taxed investor, the tax advantage of digital credit is, again, do you want 1.5% in Europe or do you want 20%? Our objective is really to build out that entire free market yield curve around the world, right? Why can't you get paid 10% in any currency, everywhere? And you can see all these currencies, right?